Good morning, gents. Thank you for taking the time to have a conversation with us. So RMB and Lesaka have partnered in the past to conclude quite a few number of key transactions for Lesaka, including the acquisition of the Connect Group in 2022, further the acquisition of Adumo and Recharger that you've recently acquired. And then you kind of went on and did a 4.5 billion rand syndicated debt package that I think optimized the capital structure of the business and set the business up for success. On the backdrop of that, I think from an RMB perspective, we truly pride ourselves in partnering with our clients, helping you guys build your businesses. With that in mind, Ali, I'd love your perspectives on what you think are the key trends that are shaping the fintech space and the industry.
Thanks very much, and thanks for having us. I mean, there's global trends and there's trends that are sort of more accentuated in the South African environment. I'd probably bring out three. The first is there continues to be a proliferation in different stores of value that consumers are provided with. The ability for a consumer not necessarily just to transact in a cash medium, but to transact in an electronic medium, through a card, through a phone, and obviously also through non-fiat means, whether that be through crypto or through a stable coin. So the innovation associated with stores of value has been fairly prolific. The second thing is that there's definitely been an acknowledgement by regulators that they can perform a proactive role in trying to facilitate the digitization of economies because of the material benefits that provides to a society. And I think you've seen regulators at different speed engaging with incentives for parties to build digital infrastructure. I suppose that the third thing is that as the scale and the complexity of digital infrastructure evolves, you have a need for greater amounts of capital associated with it. There are increasing barriers to entry. I think in many ways, the AI evolution actually increases those barriers rather than decreases them. So the trend that I see is increasing consolidation associated with players, where people who developed use cases for niche segments maybe agglomerate in clusters. And really, in some ways, the evolution of that digital infrastructure is no different to the evolution of the physical infrastructure we saw in years gone by. It makes no sense for two railroads to be built next to each other. And in many instances, you have economies of scale in the provisioning of payment infrastructure. And so I expect to see greater and greater innovation, but in fewer and fewer aggregates.
Thanks for those insights. And maybe just reflecting on some of the acquisitions I mentioned a little bit earlier, Dan, I'd love your perspective on how do you think this strengthens Lesaka's offering to underserviced merchants and consumers in South Africa?
Yeah, thanks, Kedy. When I reflect back, it feels a lot longer than 3 years ago, where we took the Lesaka business, which was primarily focused on consumers, with a small payments business, and merged it with the Connect Group, which brought on board a merchant services capability, as well as a cash and a lending capability to those merchants. So that really strengthened and complemented our offering to the merchant community, whereas previously we were very much focused on only the consumer or the retail side of the market. I think then forward, Adumo acquisition a year ago, that really strengthened and consolidated our presence in the merchant acquiring and the merchant space in particular. It moved us from the micro merchant, a smaller segment of the market, into the medium-sized or medium part of the market. And then most recently this year, we concluded the Recharger acquisition, which is an electricity prepayments metering business. And that complements our broader enterprise offering, where we're able to service both landlords and ultimately consumers of electricity, and fold that into our broader consumer and merchant offering. So when I look back at those three transformational acquisitions we've made, what has it given the group? It's given us greater product offering, greater capability to service two clear sets of customers segments in the market.
Fantastic. Thank you, Dan. And I think, Ali, maybe another one for you, and what's quite topical in South Africa is this transition from cash into digital. In the context of Lesaka and broader in South Africa as well, what do you think are the key milestones that I guess South Africa and an entity like yourself, like Lesaka, can get right in order to expedite the transition into digital?
The digitization of the society here really speaks to our purpose, and it also speaks to two of the key challenges that our country faces. The issue associated with the dominance of cash as a medium of exchange here still is not just an issue around the economics and the efficiency associated with it, although the economic consequences are real. It's also an issue around crime. The reduction in cash in our society materially alleviates crime issues, which is one of the key problems we face. In addition to that digitization journey is a huge support for the SMBs who effectively are often operating with marginal economics. The consequence of them being able to accept digital payments is not just to reduce their cost base, but it's also to provide greater access to capital more quickly. And really, those are the things that we are passionate about. In terms of the milestones we need to achieve in our society in order to achieve that, two big problems in the existing infrastructural environment here. The first one is we do have in our society inflated wholesale costs of accepting digital payments, and there needs to be a concerted effort to drive down those costs. The regulator is engaging with that through things like PayShap, but there's also an existing infrastructure around what is referred to as interchange, and reducing interchange in rural and peri-urban areas where you have cash dominance, I think is a critical consideration. The second thing is there is a challenge in providing access to capital to merchants who are accepting digital payments under the existing regulatory framework in an expeditious way. And that will restrain their willingness and their ability to accept digital payments. But really the digital payment infrastructure in the rural and peri-urban areas in South Africa and the underserviced areas of the country has been driven by the fintech innovations. You need to have a technology impetus in order to service customers in these areas in a manner that is sustainable from an economic perspective. And so Lesaka and equivalent businesses are very focused on driving that story.
Thanks, Ali. Could you provide some more context as to how prevalent this issue of digitization actually is in South Africa?
So we have a very interesting dynamic here. You have almost the entirety of the adult population that has a digital store of value in an account. Many people have many accounts in the country. So the problem is not that consumers don't have a means to exchange digitally. The issue is that more than 50% of South Africans, when they receive a deposit into their account, withdraw it from an ATM. That's an extraordinary statistic. And that results in the majority of transactions in this country still being cash. And that's in the year 2025. In addition to that, we have a profound problem in that more than 80% of all SMEs in this country do not accept the digital medium of exchange. So we really have to focus on digitizing the merchant base in order to affect the changes we need in the society.
Fantastic, thank you. And then lastly, Dan, just kind of reflecting on the relationship we've had as two organizations, how do you think that has helped you kind of position Lesaka to be one of the leaders in the fintech payments space?
It's really enabled the implementation of a strategy. And what do I mean by that? RMB team has advised us on our acquisitions. It's also helped us fund our acquisitions. And if I reflect back 3 years ago where the business was and the risk-adjusted view that RMB took on us as a non-cash generative business, but an asset-rich business, and how the team was able to sculpt a funding package that was suitable for that transaction and our circumstances at the time. Roll that forward a couple of years, our Duma acquisition, the enabling capital and funding that RMB provided for us there, as well as obviously the advice on the acquisition, and then more recently our Recharger acquisition as well. And when I roll all three of those together, we recently did refinance our various debt packages. The 4.5 billion rand package. It was just a natural evolution of our funding that was fit for purpose and our business at each of those stages as to where we are now. So simply put, the advice we've received from RMB on acquisitions, as well as the funding for them, has been an enabler of the implementation of our strategy.